Test, 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 test. All right. My computer restarted overnight thanks to Windows kind of doing its thing. A quick mic check just to make sure I'm not blowing out your speakers or your headset. Is that good? Now I have to do this again. This is episode number 2557. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. You know, one thing I can't stand about Windows, great operating system. Windows 10's fantastic. I will not touch Windows 11 with a 10-foot stick, but it's sound problems. You notice that I do a sound check every morning because of this. It's just out of nowhere. Sound settings change. It just changed my default microphone for some reason, and that's why you couldn't hear me. So it's just weird. But anyway, look, the overall market condition, we have mixed risk posture. We have Europe underwater, Europe trading below prior settlement. Switch to Linux, it can hardly run anything on it. Anything that I'm using, of course, Linux is very robust and runs pretty much every device out there. Anyway, Europe is below water. US is up in the 30 to 40 basis point range. This morning we had quite a few important releases. We had Citigroup, which beat by 34%. Citigroup came in at $1.63 versus $1.21 on higher revenue, 20 billion versus 20.1 billion versus 19.3. Then we had PNC beating by 16%, coming in at $3.60 versus $3.10. So you can see the S&P kind of climbing. Recall that the financial sector is a good chunk of what the S&P 500 is. In case you don't know, you should. Here are your sector weightings. So information technology is heaviest. This is as of September 29th. Information technology is heaviest, but financials are no small part of the S&P 500. They're the third highest piece of the S&P 500. And so we expect this thing to move in sympathy. Going on with JP Morgan broke up by 9. Came in at $4.33 versus $3.96. And then Wells Fargo came in at $1.48 versus $1.24. So it beat by 19%. And United Health reported as well. They're pretty big, $92 billion for Q3. It's a lot. $6.56 versus $6.32. And then finally, Progressive came in at $2. Oh, not finally. There's one more that's a big one. Progressive came in at $2.09 versus $1.72, 21% up. And then BlackRock for Q3, which is trading lower, is at $10.91 versus expected $8.26. BlackRock beat its earnings by 32%. So, the idea that these banks are suffering is ridiculous. There's plenty of profit there. Revenues went up. Generally, revenues beat, as well as, let's see. Looks like Progressive's revenue fell short, but still there's growth. Profits exceeding the growth of revenue, which means earnings exceeding the growth of revenue, which means higher profitability. Okay. So what else is going on? We've got nothing after the market. Chinese inflation data came in lower, which is bullish for that economy. Exports higher, imports lower. Israel's ground military building up on Gaza Strip. It's moving all kinds of weapons and troops and stuff to the border of this tiny little portion that's left of what was known as Palestine. The Israeli military asked the United Nations to move 1.1 million Gaza Strip residents away from certain areas as it plans to conduct a ground attack on the Gaza Strip. Very poor. So that war there is impacting a few things we'll look at in a minute. Is impacting the price of crude, is impacting the price of natural gas, huge gas extraction out off the coast of Israel by, I think, Chevron. So all of that is expected to be, this is a new war that the market is pricing. That the market's expecting to price in, right? And energies are are expected to be restricted energy supplies. Iran has threatened that it would open up a front with Israel, and it's just that whole area is just a mess. But there's a concentration of energy over there, so crude is up $3.37, as you see there, 4.05% pop in crude. And what's left today, we just had Fed's Harker speak and release some dovish comments. Fed Harker says Fed is likely to be done with rate hikes, supports higher for longer interest rate stance, which is actually much more impactful. Higher for longer is more impactful than the magnitude of interest rates. If interest rates go high enough and the market responds immediately so that the Fed can ease, that's better than having, intermediate rates or rates at intermediate levels for a long time. So relatively dovish comments from Harker there. We get Michigan sentiment. This is a mover at 9 o'clock today, a half hour after the open. And that pretty much wraps it up. We have BOE's Cunliffe, who's going to be speaking in the evening, London time. Not expecting too much there. Looking at the S&P, the S&P is in a multi-distribution profile, very clear price discovery, up. And there's quite a bit to talk about today when it comes to the S&P. Excellent structure left behind from yesterday and an opportunity for responsive buying and an outside-in trade. 260,000 contracts traded. The inventory is balanced. And we have 31.75 points of range, which is pretty decent. So let's take a look at that. Here's the S&P. The S&P just pushing right back to where it came from yesterday. Yesterday we had, well, for those of you who are in the Convergent Accelerator program, we talked about this setup in the 43.93. It ended up coming back to the mid and stalling out over there. But the fact is the S&P has dealt with news. So this is a news event that took place yesterday, starting from 44.09, 44.07. What was the news? In case you didn't hear it, the news was the 30-year bond auction, a pretty large auction and a very important one, took place at 1 Eastern yesterday. And the results were really pretty poor. The bonds were expected, the prior yield on the last auction were raised by about 40. I don't remember if it was 40 or 70 basis points just based on the auction. And so what we saw, if we look at the overview here, what we saw is the bond market exploding to the downside, taking everything else down with it, and then rallying back up. So this move down, this breakdown has resulted in the bond markets basically moving back to the SOC. So the bond markets and also the 10-year note have both gone back to the SOC. You could see where the move took place. and they've pretty much brought us back to where we were yesterday. Okay, and what's happening in the equities market is basically the same thing. We have the S&P basically pushing back. It's trading right there. We're stalking a short against the IB low yesterday at 93, and all it could do yesterday was get to the mid of the movement, the mid of the session, as we saw here. Came right back to the mid and it held there. That was the other place to look at, but there was a lot more going on at 93, and we just pushed up there on the open, dropped off, and now we are back. We're squeezing back, right back into the balance up top. So we are squeezing right back into this balance zone up top. You can see the last trades here occurring at 96.50 and so on are coming into where balance has been for the last 3 days or 2 days. You have balance, point of control is right here at 95, point of control right here at 95, 2 days in a row, inside day. Yesterday we broke the high with a gap up, tested, came down, and then, traded back and forth, broke lower on the 30-year auction, and then we left an internal excess. This is still an excess. Left an excess low where we saw the market just flip back up. Here it is. You see the market flipping back up and then walking itself back to the mid and then stopping at the mid to settle at 43.80. And what it did is it closed basically out of balance. It closed out of the prior day's balance, and then this morning it just pulled back to 65 down here all the way to the excess low right there where we have the excess low, retest the excess low, and then walk itself right back up about 30 points now to the upside, and it's squeezing higher. So a lot of structure and a lot to digest there. You can see that the overnight session is a multi-distribution profile. Why is my point of control down here? This isn't correct. Yeah. John, what's your point of control here? It should be 44.03. I don't know why it's down here. Don't know why the point of control is shown at the, oh, I know why. Okay. So anyway, so we are pushing back up into the prior IB. So the action this morning is responsive. It's responsive back into the prior balance. And what this is likely to do, having tested down into the 43.55 area and bouncing back up, this is very likely now to take another shot at it's very likely to go back to the SOC of 44.07, 44.09, and then push right back up into the gap zone. So we're expecting this thing to have had a decent chance to test below the last 2 days' lows, and then it's likely to squeeze to the other side and start moving into the 44, 18, 15, 19 from the other day, and then to start squeezing up into the gap zone into 46 still. So we've pulled back, we filled in part of the single prints that were left behind from last Monday, and we rejected that area very clearly, and we're starting to move right back up the ladder. And as it comes back into balance, it's really important to monitor to see what it does. And the area that really is important to monitor right now is this 95, 96 area. This is the point of control of those last 2 days before yesterday. If it cannot hold this, then it's very likely to squeeze back up to the SOC And then if we can't hold the SOC, really high probability test into the gap, and then we start to make our way into the gap. That's what that looks like. The NQ has a different story. The NQ has run way up. So while the ES, opened higher, tested higher, came down, sold off, as I've been saying, the NQ is way, way, way ahead of the ES in terms of the bullishness of it, and it's dealing with its single prints. The NQ, interesting test this morning of 366. So the 366, 67 area, very important. Very important to monitor what happens at that price. You could see there was a collision there. So on a retest basis, I would want to see what happens at 66, 67 today. Crude did what was expected. Crude gapped up on the Israel-Palestine news, started filling to the downside, opened in a gap, tested value right there, left an excess, and closed down below. And then it opened up above, and it tested where? It tested exactly the beginning of that excess right there, 85.20, 22. And then it broke to the downside, and it, we did close the gap zone. This is what I talked about Monday, that we're likely to start walking down in crude, close the gap zone. And once we close the gap zone, then crude can make its next move. We were still expecting 80 on this down move before this new war broke out. And it looked good in that way. Yesterday it opened and it traded up into the excess, came back into value, into the prior day's value, tested the point of control, and then went and checked the entire value. And you could see value is symmetrical, pulled back into the prior, into this area's value, tested value right there, and then finished at the low. And then this morning with, additional news, we had a gap up, crude up $3 or so, gap up, and then since the open, and by the way, the open and the opening print and the high print in crude this morning are one and the same. So this so far in crude is an open drive down. Okay, so what does this say in crude? This says that you probably don't want to be long. In order for this thing to become a long candidate, it has to cross, consolidate, break the other side of the open, and then start to move into the single prints and then the excess up here. Right now, crude is not a long, in my opinion. Crude has tested the point of control in the immediate area, the combination of everything that's going on here. But it's got a gap down into 85.20. So if I were short in crude, that's the area I'd be looking at. Where is the last auction? What is that auction high and the gap zone? And that would be 85.20. And that's likely the spot that crude is likely to drift to for the rest of the session. We're going into the weekend. Crude oil futures, which are physical futures, close at the end of the session, and we're going into the weekend with an elevated amount of risk for energies. So it'll be interesting to see how they close. Remember, energies close at 1:30 Central, 2:30 Eastern. I'm expecting some pretty good shifting and positioning coming into the close, because these guys have exposure now in crude all the way till 6 p.m. Eastern on Sunday. A lot can happen between 5 p.m. today and 6 p.m. on Sunday. That's when futures close and open back up. So keep an eye on that. I'll leave you with that. What are we expecting for today in terms of the action here? Forgot to cover that. Let's do that here. What are we expecting today? We're expecting this thing to open. We're opening at the IB low of yesterday. We're opening inside of 2 days of bounce. We're opening on top of the composite, the micro composite point of control right here. This is expected to be choppy, but a relatively aggressive chop. I'm expecting this thing to pull back a little bit. Inventory is still even. If you look at our sheet, look at the inventory, it's 13%. Inventory is relatively even. I'm expecting it to pull back, chop around. I'm looking for the high, the overnight high to be taken, and then for this thing to come back into the prior day's point of control and to push into the SOC here at 09, 09, 07 at a minimum. And then if it consolidates and then starts pushing through, then we are likely to take out this week high up at 18.5, 19. That would be the next play. Okay, so that's the primary scenario. The secondary is open, move up, check the prior point of control. If it doesn't find it acceptable, we're likely to see an impulse down, pull back, and then we're starting to fill in for a gap to settle. Trade back to 43.80, 43.85 first, 85 for the point of control for this high volume node from yesterday, and 80. That would be the secondary scenario. The current scenario is the primary scenario is it's likely to go back to the SOC. If the treasuries have gone back to the SOC, the S&P is likely to get there. Good luck, and I'll catch you tomorrow. Take care, everyone.